Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Just past 4 p.m. here in Sydney. I'm Nadine Blaney. It's really nice to be here with you. Welcome to the COB. It is the 8th of December. I'm sure many of you are on the countdown to the Christmas holidays as well, particularly if you have little ones or little grandchildren. I would imagine what a good time of year it is. But again, as per usual, I'm getting ahead of myself. Let's take a look at this local market. There is the COB Australia Index. Looks like it has closed mildly positive. Not so for the S&P ASX200. So 8,625 is where we're sitting at as we have the last of the day's trades rolling through, off by about 0.1%. So generally speaking, we're underperforming what's happening across much of the region. The Hang Seng is an exception to the rule. It's off by about 1%. But mainland Chinese markets are pushing higher. Japanese markets are pushing a bit higher, although I'm also watching yields on GGBs rise at this very moment as well. Also, US futures are mildly positive. So look, there's a bit of trepidation. We do have a interest rate statement due here tomorrow. No expectations for a cut. And the market really is banking on a Fed cut coming through later in the week. I dare say there will be a lot of disappointment if we don't get that Fed cut coming through. So policy paths, the divergence between policy really starting to be a talking point as well. If you do have the US cut and you have Australia stay on hold, some even now talking about rate hikes coming through in 2026, what will that do to that interest rate differential story? And of course, the Aussie dollar as well. I had a couple chats today about that one if you'd like to go online and take a listen. But yeah, it was just a bit of a lackluster session here to start the week. I'll get some analysis with Josh Gilbert from eToro in just a moment. Sorry, Josh Barker, apologies. And one, I guess, highlight of the day today would be the lithium space. So UBS has upgraded its outlook for lithium and revising price targets for some of those companies as well. And they were amongst the best performers today. As you can see there, PLS up by 6.3% to $4.04 min-res. Liontown, though, kicking it out of the ballpark, up by 15.5%. along with Core Lithium. Vulcan Energy looking to raise a bit of capital that came late last week. Look, let's get to some of the big sectors today. So whilst some of the big miners were in the doldrums, and that of course weighs on the market overall, there were some bright spots, particularly with those lithium plays, but also Fortescue up by about 0.1%. Coal prices came under a lot of pressure in China today. Now that we're on China, though, I think it is worthwhile mentioning the really interesting trade data that came through. We saw exports in China topping forecasts in November. Why? Well, because they are shipping tons of stuff to non-US markets as, manufacturers there really look to deepen trade ties with the rest of the world in light of the US President Donald Trump's high tariffs. So diversification is happening around the world. Telcos, well, here is a sector that was into positive territory today. Aussie Broadband will become part of the 200. I had a chat with Scott Phillips from the Motley Fool about some of those index inclusions and exclusions, alongside a chat about corporate travel management. That's online at ausbiz.com.au. Well, there wasn't a lot of corporate news out. I mean, as I said, we're getting close to Christmas, but we did learn that National Storage REIT hit a record high on agreeing to that Brookfield GIC buyout. Telix Pharmaceuticals has dosed its first patients in phase 3 of a global trial for its lead medicine for prostate cancer. Meantime, Clinuvel will expand its R&D Innovation Center in Singapore. DigiCo Infrastructure REIT has a new CEO. Michael Juniper has been appointed, and American Rare Earths appointing Mark Wall as its chief executive. And a very warm welcome to the COB, Josh Barker from Barker Wealth. My apologies, Josh, old habits die hard. So, what do you think of the day that we've now got pretty much under our belt here in Australia?
Yeah, a little bit of a disappointing day, and I mean that's been sort of the story of the last week or so. We're still about 5% off all-time highs here locally, whereas the last 2 weeks, the US has pretty much bounced back to be within less than 1% for the broader market from its all-time highs. So, yeah, we're seeing that interest rate story be very different. We're talking about not getting those cuts like we expected, and potentially even rises in the future. Meanwhile, we're sitting here waiting for the Fed to what unanimously seems like a Fed cut later this week. So, yeah, very different markets, and I think really does reiterate the sort of focus to global. We've got a lot of good companies here, but we really do specialise in that mining area, and I guess outside of that, it's very difficult to keep up with global markets, particularly the US, over the long term, and we've seen that really evident over the last couple of weeks anyway.
Yeah, our market is so cyclically exposed. So that works with us, for us, or against us, I guess, depending on what phase of the macro environment we're in, and also the underlying commodity prices. Well, today, case in point with those lithium miners, correct? UBS upgraded its outlook for lithium, and on Friday, it did expect to see an increase, about 11% I'm reading, in the demand for battery energy, storage systems. So that's really lit a fire under the sector.
Yeah, it has. Like I mentioned, we've got there's some of the best ways to get this sort of exposure through that lithium. It's very linked to sort of China, which is the largest exporter. But yeah, the commentary from UBS is not only sort of increasing the overall output by 2030, which I think was largely unanimous that in 2030, the lithium's going to be great, but it's just about how it gets there. We've been in a supply glut for a couple of years, but their expectations, I think, what's most important is their expectations for 26, 27 and 28. They've all increased that quite considerably. So, yeah, looking good. Some of the big names on our market will definitely benefit from that on a cash basis, particularly the producers like Pilbara, MinRes, IGO somewhat. But yeah, I think more so Pilbara for that pure play is going to be the biggest beneficiary of that price increase now anyway.
Yeah, so Josh, you do look to gain exposure to the lithium thematic on behalf of clients?
Yeah, no, like we've liked lithium as a longer term play, and it's just about being in it at the right times, I think. And I think, obviously, like I mentioned, it's going to be good in 2030, but it was just about getting there. And it really it sort of changed its trend as China had a shutdown in one of its mines, and then ever since then there's sort of been a lot of positivity around the sector. So I think that's brought it out of the bear market, which is definitely a positive. And I think, moving forward, it's just going to focus on getting to that level that it wants to be in 2030. Very linked to sort of China's growth, which is starting to look a little bit more positive. They're starting to get a lot more involved in, sort of spending money, like you mentioned, in the manufacturing sector on EV, also sort of energy storage. So there's a lot of flow-on effects to, China doing well in its own right.
Do you think that China and its economy, and hopefully an improvement there, could be an X factor for the ASX200 next year? I mean, we've come to realize that the big bang stimulus of the past in China, is unlikely to come. It hasn't this year at least. And so almost as if the narrative has moved past that, we are expecting to see an improvement continue in the Chinese economy. So yeah, could that bring some positivity come the new year?
Yeah, I think so. Different areas, like obviously lithium's one, but on the other hand, they're sort of refusing to buy from BHP. So it's not going to work perfectly as, just a broad boost. But I think certain areas, obviously you've got rare earths. That's obviously an area that, brings a lot of Chinese buying. But I think it's more so, I don't think we're at the point where the market's waiting on that stimulus to come through like we have seen probably over the last couple of years. The market has just been waiting for these big announcements on stimulus. But what it seems like now is the economy is really starting to stand on its own regardless of that. and just the numbers improving after, what's been a pretty rough 5-year period for China specifically. But, we're starting to see the tensions with the US really get dissipated by China looking to, stand on its own feet. It's a big technology country. The recent IPO for More Threads was really interesting. Raced off to $1 billion market cap, and I think that's a sign of things to come. China's going to look to be completely independent of the US. That's why we're seeing, whilst we've also got the market within 1% of its all-time highs, Nvidia's still over 10% down from its all-time highs. So we're sort of seeing a little bit of a shift in that tech dominance, potentially over to China, from here on out, and probably for the next 5 to 10 year period.
Well, all of the opportunity that will throw up as well. We'll talk about it another time. Josh, really appreciate you wrapping the day for us.
Thanks for having me. Appreciate it.
Excuse me. Now, as I mentioned, there wasn't tons of corporate news out there. So when I sat down with Zach Riez from Banyan Tree Investment and Andrew Coleman from Team Invest today on the call, I asked them for a stock they reckon will perform in 2026.
REA Group continues to deliver 30% plus return on equity and return on capital. It's been growing at high double-digit growth for the last decade with very high stability, has almost no debt on its balance sheet anymore. It's paid it all off. And yet, as you can see in that chart, the market's just got cold. In the same way that we were talking about before, the market ran the PE up to a stupid number over the last few years, getting excited about that growth.
We're looking for stocks with high ROE and high return on invested capital, right? And so one name that sort of popped up recently is Lovisa, and it's also popped up because it's had a bit of a share price correction. And I think because it's done so well over a long period of time, I think the run rate, the growth rate, the trading update was slightly below expectation, but nonetheless it was healthy. The reason why we like this is I think its return on invested capital is almost 30%. So every dollar invested into its business, it gets a return of 30-odd%. So that's the kind of business we like. Its cost of capital is low.
All right, so you can listen to that extended analysis of those two stocks to love for 2026 via the website, ausbiz.com.au. At the top there is a series link to stock of the day. Let's get to some of these market leaders. I think say no more when it comes to these lithium names. Liontown up by close to 15.5%. Zipco up by 5% to $3.15. Bapcor came up in my conversation with Scott Phillips from the Motley Fool, questioning whether it's value or a value trap. Let's go to some of the companies that really did lag the market. Uranium continues to be just a really volatile story. Actually, Boss was mentioned today on the call, not as a buy, but there was a buy placed on another uranium outfit. West African Resources, Capricorn, Linus, so all those resources names getting weighed down, and Life 360 off by 3.7%. Now, in the small to mid-size area of the market, Anteris Technologies up by 25%, so looking good there. The other side of the coin, though, coming through in Terra Metals, which is down by 12% to 11 cents per share. So what is happening tonight? Well, in the Eurozone, we get German industrial production. It's expected to lift by 0.3%. We also get the Centix Investor Confidence read in the Eurozone. It's expected to firm slightly, but remain negative. In the United States, the New York Fed's 1 year ahead expectations survey will be released, but it is the last big week for data coming through this week. So we get the Fed, well, obviously we get the RBA. Tomorrow we get the Fed, we get the Bank of Canada, we get the Swiss National Bank. There's also data on JOLTS job openings in the US, Australian jobs, and we have a Chinese inflation read that we would like to, see later in the week. So, of course, the RBA rates decision is tomorrow. We also get the monthly NAB business survey. We'll bring you full coverage of that rates decision live from 2:30, and we will bring you the media conference that's now held by the Governor Michelle Bullock in the wake of that decision. Here is a final look at the local market. So here you go. The COB Australia Index finishing mildly positive, but that was not the case for the S&P ASX 200. Closed down by 0.1% to 8,624. But tomorrow is another day. We'll see what tonight brings on Wall Street, which will no doubt be influential here tomorrow. We'll be here with you live from 9:45. Thanks for watching.